Ladies and gentlemen of the crypto space, it's another day. Today is Thursday, July 23rd. It's always a pleasure. This is my favorite time of the day. It's a good time. It's the time we get to talk about what we do, why we do what we do, and how we do what we do to make the best decisions possible. And that is the most important thing we could possibly do. And today, the general topic is what not to do when your altcoins go to the moon, which has the implication of what to do when things go to the moon. How do we make these types of massive decisions? Now, there's people out there that have been through this. There's people that have been through the 2000 insanity, the 2008 insanity, and dare we go back even further. There's people that have been through processes of massive systemic change where the markets go through the roof. So they have experience. And there's people that have maybe education that gives insight into choices that can be made. Now, I myself have never been through times like that. I've been through 2017 and 18, which many um, traditional finance persons may not have experienced, so they don't have insight in that regard. So the whole point is everyone has information, everyone has a certain amount of experience, and all the that's all the judgment and information that can be used to make these types of decisions going forward. Who's in the chat? We got Digibiter, Just Nibble, Golden Calf, Gabriel, David. Yes, we are here. And let's see what we could do. Let's put over to the fancy screen. Ooh. I labeled it fancy. I called it fancy because that's what I labeled it. Some pretty cool things going on in the Twitter stream. Obviously, this thing's on fire of late. I want to start off with gold. Gold is at 18.95. This thing's been going up like $30 a day. This is in breakout mode. Gold doesn't move like this. It doesn't move with this speed. Gold is a barometer of sorts. Gold is telling us a story. And the story that gold has always told us is a loss of confidence in the financial system. Um, because if there was confidence in the financial system, the money would be pouring into the financial system. It'd be going into equities, it'd be going into bonds, it'd be going into treasuries. And since that money is not and is going into gold, that is a loss of confidence in the financial system. And the same thing with silver. I don't have the silver chart up right now, but that is essentially what is going on. Now, bear in mind, they printed $6 trillion. So what you're going to see is everything's just going to go up. And you know what's not going to go up? Paychecks. So that's just what it is. And we'll see what happens with consumer staples, food prices, so on and so forth. From what I see, we have a steady grind of inflation in consumer staples prices. Food, beverages, services, dining, restaurants are obviously expensive. If you have half capacity at a restaurant, you're going to have to charge more in order to hopefully break even as a business, as a functional business. So there you go. Every single restaurant in this country, the United States, is going to be more expensive to go to in order for it to be a viable enterprise. And that, ladies and gentlemen, is inflation. Um, so this is why we see this chart going like this. Systemic change is coming. Anyway, let's look at something not doom and gloom. Let's look at the beautiful charts that we see right about now in crypto. This is by far this is my favorite chart right now. It is peaking down below, but bear in mind there was never really a solid bottom to this symmetric triangle, and obviously I drew this at like the 30 minute. When did I draw this? Yeah, look at about the 30 minutes. So this is not really too accurate. I mean, I guess you could probably plot this a little bit higher. See if I could zoom out. Oh, yeah. Eh. So you want to usually hit about 2 touch points, but there's obviously a couple down here dipping below. So it's all about, I don't know. It does look like it's a little push to the downside, but bear in mind there's no sustained directional flow. It's not like bloop, you're down like 2 bars. So This is the type of thing. So this is a very interesting pick. Why? Because I had a lot of Kyber at one point, and it went from 70 cents to whatever it is right now, buck 60. Now I'm out of the trading position, and I have my staking position. So in many regards, I know what's going to happen at the fundamental level over the next couple of years, and that is the position that I reassure myself of. This is a deflationary asset with sustained supply disruption due to the staking, the incentivized staking component. This will continue to appreciate over time. So you might have short, temporary, depreciative experience or effects, or the shit's going to go down in price a little bit in the short term. That's the way it works. But over time, that's what deflation does, and that's what supply disruption causes. It causes appreciation. So, yeah, so I shouldn't even be looking at this chart. Maybe the only reason I have it up is because of these beautiful shapes and the revelation of a larger macro trend. Um, but I wouldn't even liquidate a portion of my position if I saw a breakdown. I mean, I'm 7 4. I'm up over a fair amount, over 150%, give or take. Uh, about there. Anyway, so I mean, look at this beautiful thing. 58 million KNC supply staked. There's 180 million in total circulating. So we're talking about 30 plus percent. Nice average, round number. 30 plus percent supply disruption, and then the burn. So the $56,000 worth of burn is going to happen uh, in 15 hours. I believe the reward is going to burn in this first epoch also. I do not know. I think maybe this reward reset. So, point being, there's going to be over time substantial burn, substantial supply disruption. And that's the whole point of identifying a deflationary asset. There's no other asset like this right now in the crypto space because Kyber has utility and it's basically a systemic component, piece of infrastructure. It's a liquidity tool. Um, there's very few other assets that have tried deflationary mechanisms. But to top it all off, this is not just an asset. This is really like a focal point or something that is an integral component of really the future of the crypto space, DeFi. Liquidity mining, experiencing is brutal, David says. Yes, yes, yes. Brian Brooks, the man of the day, Igor. Woo-hoo-hoo-hoo. Brian has a hell of a vision. There's a lot of videos of him circulating on the internet, and the way he speaks is impressive to say the least. And he has intentions, which is really cool. Tyler was talking about liquidity mining. I don't know. I don't know much about liquidity mining, and I don't care. So I know. Okay, I take it back. I'm sorry. So we have carry trades, meaning if the cost of borrowing is less than the yield produced, it's a successful trade, and that's the whole point of liquidity mining. And using these governance tokens as incentives, which is increasing the yield. It's incentivizing the yield. So you get like 30% yield, and it's only costing you 5, 10, 15% for to pay the interest on your borrow rate. So that's what liquidity mining is. Now, I don't like these governance tokens too much. I think they're an evolution of the ICO, and I think they're entirely legitimate in that regard. Meaning if they're given away for free, if they're sold, then it's a damn ICO. But if they're given away for free, and the whole point is governance, it has a purpose, it has a utility. It's the point of it is governance. So, it does put Kyber in a little bit of a questionable position because I believe there was a selling an ICO. But its current incarnate or its current purpose is for governance. So that does have meaning. There's a lot of unknowns about the way things are going to play out. But the point being, I would not buy a governance token. I wouldn't buy Comp. I wouldn't buy BAL. I won't buy Curve. I won't buy um, the Y tokens. I won't buy them. It's just not of interest. So what is my interest long term is the accumulation of $1 million worth of Bitcoin. I turn it into Ren BTC and I get 4, 5, 6, 7, 8% on it. Um, and that 8% you know, 80 grand a year, uh, then you take 40 of it and you turn it into DAI, and then you're getting 4, 5, 6%. And then every year you're making more money. That's my goal long term. So how do you get there? I don't have the answers. All I know is I have somewhat of a repeatable, predictable strategy that can be done over and over. Protect your gains. Look at this. This has a break to the downside. This is one of my favorites. This is Bancor. Has a beautiful chart for a fair amount of time now, almost over a month, in an ascending channel. But there was a bit of a break out, not overwhelmingly to the downside. So I still have a nice position, and I do have a number in my mind that constitutes the long-term position. But I was sized. My position sizing was a bit above my long-term interest in order to hopefully capture a large swing to the upside. But since I see a swing to the downside, you got to protect your gains. Now, my position has not been reduced to less than the long-term size that I wouldn't consider liquidating. It's that, comparable to what I've described with Kyber as the staking position. So I have a number in my mind that's comparable to what I've done with Kyber. So that is my recommendation. You have two separate portfolios. You could even have more. But in my mind, I break it down to two. I have my long-term stuff that I have no interest in trading because I have a long-term fundamental vision of the way these assets are going to be over a period of time. And then I have my trading position that capitalizes on breakouts. For instance, this is a great breakout trade. Now, this is the epitome of my long-term, I'm never going to touch this bag. This is Digibyte. I have had Digibyte for years. Now, don't get me wrong, I sold a bit when we were down at zero point 0.2 cents, and now what are we at? 2 cents? So give or take. Um, but the same applies. I had that number in my mind of my long-term position, and as of right now, I'm at that. I don't, I wouldn't buy or sell. I have my position for the long term. And that's, you know what, that lets me sleep at night. That's reassuring. I don't have to worry. I don't have to think, am I going to buy? Am I going to sell? And that's nice to have. Now, listen, if I doubled up, I was doubled up at one point, but this was probably at about a buck 10. Um, and when, if I had 100% more Bancor than I wanted to hold for the long term, then you kind of get worried. If it breaks to the downside, you have that part of the position you want to sell in that scenario. So you're really like wanting to watch the charts. But that's something I don't want to do. I don't want to sit there and babysit charts. Who wants to sit there and babysit charts all day looking to protect their gains? I'd rather have my fixed number, my fixed long-term position, and check back on it in a couple of years. Alrighty, let's keep it cruising. Ethereum is in a bit of a breakout. We saw it at the 240s, and now it's at the 260s. Whoa, 272? Are we really at 272? Oh, about 265. 272. Oh, Ethereum's off to the races, ladies and gentlemen. That's beautiful. That's good to see. So I had the Bitcoin chart up. I don't right now, but we're still going to be under pressure for a little bit. I wish I had the chart up. Let me pull it up. Boop, boop. Load them up. BTC, USD. I pulled up on Gemini. All right. I lost all my lines. But I wish I had my lines. But the point being, I think we're under a little bit of pressure for the short term. We'll get to the point where it breaks out. Who knows when it'll be? But Bitcoin is a perfect example of a long-term hold. Guess what? Long-term, the whole point of this video was what not to do when your altcoins go to the moon. And so when when your altcoins go to the moon, you need to take profits and move it into Bitcoin and Ethereum. And when your Bitcoin and Ethereum go to the moon in 1, 2, 3 years, and you're up, 800, 900% on your Bitcoin, that's when you start taking profits into DAI, USDC, GUSD, into your stable coins, and that's when you start to get 4, 5, 6% interest or a return on your investments or a return on your holdings. And frankly, at that time, in 1, 2, 3 years, that's when you start to turn your paycheck into DAI and you call it a day. And you start throwing it into Aave and you make an actual interest on your gains. And frankly, in 1, 2, 3 years, what Brian Brooks just did, you're probably going to be getting 4, 5, 6% in a bank account. So, you know, some serious stuff's going to play out. I mean, look what's going on with Syscoin. I mean, Syscoin literally just printed what I call a handle and a cup. So it's more like a handle and a cup than a cup and a handle. So this had a fat descending wedge in many regards. At least that's what I visualized. And it broke to the upside, broke through the resistance. Looks better when you spread it out. It didn't break hard up. It pretty much went sideways and then decreased a little bit. But then it broke up with our news. So it's pulling back. So it's like buy the news, sell the event. But this wasn't really buy the news, sell the event. If this was buy the news, it would be up here on like the 21st and 22nd and the 20th. So this was like literally buy the event. How about them apples? What was the event? The event was Blockchain Foundry, which is the public company that deals with Syscoin for many years at this point, partnered with Binance to deal with uh, BNB, BUSD, which is really cool. Albeit, all complexity and controversy aside with Binance, it's good to see Syscoin doing something, uh, getting traction, something that's meaningful. Syscoin deserves it. They have one hell of a platform, and they've been developing this platform for years. And they have a capacity for cross-chain tokenization. And if you tokenize, so if Bitcoin, I'm pretty sure BUSD is issued on Ethereum, but that means you have transaction gas to deal with. So if you're able, transfer it over to the Syscoin platform, then you send it to someone, and then you transfer it back. You have bypassed the gas requirements. So instead of like $5 worth of gas, it's 2 cents worth of Syscoin transaction fee, and that's the whole point of the Syscoin bridge, the Sys bridge, so to speak. Much potential. And that's not the only thing Syscoin does. Syscoin has a robust platform, and it's definitely worthwhile to look into if you don't know the extent of what their offerings are. Now, BlockNet is absolutely one of my favorite projects out there, and has recently given some nice price appreciation to the upside. Look at this beauty. Will it print a double top? I mean, look at that RSI. This thing's about to rip up. Looks like we're in for another leg up. But if you look at this, back on, about a month ago, we were down at 10,795. This is 18,97. So that's about an 80% rip, give or take. Let's say 65, 10 to 18, say 70. That's a hell of a rip. Blocks of beauty. They're obviously, if you look from all-time highs, it's everything's been beaten up at the UTXO level. Obviously, Digibyte, Bitcoin's still beaten up, 50% down. Syscoin, block, all beaten up substantially. So look forward to these UTXO projects that deserve where they're heading, actually getting where they deserve to be. It's inevitable. Let's take a look at the comments real quick. Nathan says, "Are ENS names a good play?" It's not a play. There's nothing to do. It's cool. ENS. My ENS name is noahseidman.eth. So it's cool. Grab an ENS name. It costs the whopping cost of a transaction fee. That's as simple as it is. What is it? ENS? Here. app.ens.domains. app.ens.domains. curious about the stability of stablecoins and some of the extreme possible scenarios for USD. Yeah, so you know that's like a little bit of an unknown territory. So USDC and GUSD are one-to-one backed stablecoins backed by dollars in a bank account. Um, DAI is minted based on collateralized debt positions. So as that collateral fluctuates in value, which is exactly what happened in March, the debt positions became under collateralized and they were liquidated, a lot of them. So that destabilized the DAI peg to a dollar, and that's tricky. So programmatic stablecoins are a complexity, which is basically RSR. What is it? Haven Protocol. Bear in mind, this is actually a decent chart after a couple of swings and a couple of breakouts from shorter term trends. This is kind of what I see. It's pretty much a symmetric triangle. Um, RSR is interesting. It's a programmatic stablecoin. It's not backed by dollars, but that's interesting because that means there's less dependence on the banking and dollar, the fiat system. So there's stuff to keep an eye on. I think RSR is decent to have a small position. It has a very high supply, so that's something to consider. Um, I don't know. Food for thought. Thoughts on moving some cash reserves into Ethereum stablecoins, more or less to hold rather than a bank? Well, you need cash, you need dollars because you have to pay bills and debts. So this is something that everyone individually will have to make a decision. I myself, probably 5%, maybe 5% of my liquid assets are in dollar cash. Um, Most of it, like for instance, this is why it's such a personal decision because you could take those dollar assets and throw it into USDC or GUSD, and those are still dollars. It's the same dollars in an FDIC insured bank account. So, and then you can throw it into, what was it, BlockFi, and you get some serious interest on your GUSD. So I like Gemini over Coinbase. I'm not a fan of Coinbase, but I am a fan of Gemini. So you get 8.6% on your GUSD. Well, that's a Bitcoin. I'd love to see what their GUSD rate is because GUSD is one-to-one dollars from Gemini. That's the one I like. So, but bear in mind, look, if you take 10 grand and you put it in at 8%, you get $800 a year, which is nothing to sneeze at, but that means your 10 grand is locked away and you can't use it. So it's not overwhelmingly liquid. So managing money is very complicated and not the easiest choice to be made about where to put things, how long to put things, and why to put things there. But generally speaking, these are the tough decisions we have to make. So that's why we're here and we're asking questions, and that's why I talky so much. That's why I talk you guys' ear off so much, trying to figure out what the heck to do with my own assets, yet alone trying to help people figure out to do what to do with their assets. So I got some nice charts up, but not much I really wanted to go in for this video. Most of this video I wanted to talk with is the decisions to be made when stuff goes through the roof, which is almost assured. I don't see why there would be any depreciative momentum considering the macro landscape of things that are playing out. I see fear. I see fear in the legacy financial system being non-functional, and that is predominantly expressed vis-a-vis the gold price, 1893. And I see the utility available in countless cryptocurrency projects that make businesses, entire sectors of industry in the legacy financial system seem inferior and antiquated. So I see parallels in crypto projects to actual functional businesses in the legacy system, just with a very different financial analysis, a very different methodology for applying financial analysis. So what's interesting, instead of saying what is the cash flow, profit, losses, so on and so forth, market cap. You're talking about max coin supply. You're talking about monetary properties like inflation and deflation. You're talking about emissions if it's a decaying inflationary asset. You're talking about yield. You're talking about if it's an inflationary asset, you got a bit of yield. But that entails that the demand for the asset must exceed the emissions rate. Otherwise, you'll have depreciation. So, very interesting things to consider. But bear in mind, this type of analysis is what I've described as a fundamental analysis of the crypto projects. It's much the same type of analysis that was historically done for businesses, but they're different aspects, the things that I just mentioned. And that's how we do it in the crypto space. I mean, look at Block. Block basically is a standout project that has no competition in a UTXO Oracle situation. That's the type of service it provides. It provides the centralized SPV. There's no one else that provides anything comparable to that. And they're pursuing the DEX, the light multi-wallet, and a decentralized exchange implementation using atomic swaps, using the X router, the decentralized SPV network. Absolutely incredible fundamental properties. And the same thing goes for StakeNet. Komodo's quiet. I find their social media and interactivity with supporters on social media to be a little quiet, a little dampened. Unknown. They've been around a long time, so I don't discount anyone merely because of lack of uh, a lack of communication or something. But I think that I find what StakeNet and BlockNet do to be uh, catchy. They catch my attention, to say the least. Thoughts of Digibot Just Nibble. After yesterday's video, I moved out of Cosmos and back into Kyber. Why? Uh, I don't. I apologize if I said something misleading. Frankly, I think Kyber is just super long term. I have as you can see what I have in there, you see my position. But I think this is probably the most ridiculous opportunity. Um, After the article that was published yesterday that the BSN is rolling out with Kyber, with Iris and Ethereum, and obviously, what was it, Neo, EOS? Those are useless. I don't know. To me, those are useless. Like EOS is entirely centralized. It's an absolutely useless project in that regard. But clearly, Ethereum is decentralized in many regards, and there's always an entire debate about how well decentralized the project is. But I think Cosmos is quite fascinating from a capacity for the general public to participate. I'm running out of time, but let's pull up. Do I have it up? So Cosmos obviously is based on validators and then people that hold assets able to delegate responsibility to validators. So it's staking. It's a type of staking. And it's inflationary. So I think there's much potential for the mechanism that Cosmos has, as well as Polkadot. And the development activity on Polkadot is even more than Cosmos. These are the two platforms to keep an eye on. But the mere fact that the BSN has chosen IrisNet, which is a Cosmos hub, to be part of the BSN's first initial release, there's just the media attention alone. We're talking about the blockchain service network of the country of China, the national blockchain service network. That's not to be discounted. I mean, what are we doing in the U.S.? Absolutely nothing. So what did I have up here real quick? I just wanted to show you Synthetics has the potential to disrupt the New York Stock Exchange and NASDAQ. It's absolutely incredible. They have options right now, but this is just all proof of concept. Just the market could be thousands and thousands of assets and derivatives. So I had an options position, the strike price at 282 on synthetics, and clearly synthetics is about $3.40 right now. And the maturity date is July 23rd, which is today. So bing, bada boom, won a little bit of a position. Probably got a couple $100 off this bad boy. 3 hours and 29 minutes, and I could claim my gain. Yay! What else? Oh, that's about it. BlockFi, Cosmos. So the three projects that I find, so Kava's interesting also. I don't have a position in Kava merely because you can't get any of this stuff. We need Cosmos Dex. We need PolkaSwap. We need these projects like now. So I was able to find Iris on Hotbit, Kava's on Gate.io, and frankly, Cosmos, which is Atom, the root Cosmos hub, is on Bittrex. So you can get this stuff, but frankly, I hate using centralized exchanges. It is the most annoying thing I haven't done it in years, and the fact that I've had to use it to get into a position that I really wanted is frustrating. But the fact that I got it, I'm satisfied. This is the type of stuff that I think changes the world. Anyway, yeah, Digibud, just nibble is very hard to choose. What do we do? What do we do? What do we do? But that's portfolio balance, position sizing. I mean, look at this beauty. Let me pull out real quick. I think this looked like a symmetric triangle. No. Doop, doop. We'll have to see a little bit more of the chart develop. But all-time low, 623% lower? No, 623% from. Anyway, I digress. Thank you, Kusama. So Kusama is the Polkadot test network. So bear in mind, you can't. It's just a pain in the neck to invest in this stuff because you don't have. I mean, at least Cosmos has Ledger integration. I mean, sure, you could use Ledger with MetaMask, but it's not like at least with Atom, Cosmos, the ticker's Atom. On the Ledger, you literally go on Ledger Live, and it has the full delegation interface directly in the Ledger Live application. I mean, for Band and for Iris, I had to use the block explorers, which it's not too bad, but the closer you get to a direct Ledger Live integration, the easier the process for people to actually participate. And I just have way too much that I'm watching to really get into highly speculative positions with, five, six, one, two, three, four, $5-6 million market cap assets. I'm much more interested in like 80 to 120 million market cap assets because I just want if 100 million if Bancor went to a half a billion, $500 million, and went 5x on his money, I'd be quite happy. I don't need 1,000x. I don't need an asset that's 10 cents to go to $100. That's not the type of risk reward for positions that I'm interested in. Anyway, you're very welcome, everyone. Much a pleasure. 12:33 on a Thursday afternoon, July 23rd. I thank you, everyone, for joining. I'll be on Twitter. I'm going to get some good questions out there. We're going to figure out tomorrow's topic. You have a good day. Peace.